Welcome into Everything Money. We're certainly glad that you joined us today. As always, it's the three amigos, Seth, Paul, and Mo. I almost forgot my own name there, Paul. You know I love you. If you're watching, our patrons all over the world, you know I yub you so much for your support. And of course, we love you having you guys on the live streams. Today, we are looking at something very basic. All the hubbub, all the stocks you've ever heard of. We still say that 95% of any normal person's portfolio should most likely be in a very safe ETF that'll return, as shown in the past century, about a 10%, a little under 10% return every single year. One of those ETFs that we love and is pretty much one of the most famous ones is SPY. This is the S&P 500 ETF, and Paul's going to explain to you right now why he loves it so much and why it's important to put a vast majority of your money into this ETF. Go ahead, Paul.
So I'm also not going to, I'm not endorsing any specific ETF.
Sure.
I do like SPY. I own it in the past. There's also VOO with Vanguard. ETFs are low expense ratio funds that follow the market, okay? Or follow whatever index you're trying to look at, whether it's you want to pick a specific sector or whatever it is, it follows at a very low cost, okay? The reason being is most actively managed mutual funds do not beat the market on any given year. And then over long periods of time, they definitely don't beat the market.
So let me slow you down, Paul. What this means, I had this conversation yesterday. If you have a financial planner, number one is they're most likely not beating the market. By a vast majority of them do not beat the market.
They'll claim they do, by the way.
If they're in a mutual fund, that might not, that's probably not beating the market. And there's fees on top of that, which is helping it not beat the market. Go ahead,
The
Paul.
other thing is, guys, you might sit there and say, no, I looked at my funds and they are beating the market. Look, a complete cycle of bear and bull market. Don't look at just the last few years. Anyone can make money in good times. The question is, can they make money in complete market cycles, a full bull and a full bear market?
So the conversation I have a lot is with normal people like yourselves, if you're watching, is you can grab a hold of your money, put it into some safe ETFs. You don't pay the financial advisor. You don't pay the mutual fund fees. You don't pay any of that stuff. And you can sort of
you'll probably do better.
You'll probably do better. So go ahead, Paul. Tell us how we will do that.
So look at this, for example. The average mutual fund is between 1 and 1.5% expense ratio. This is the S&P 500 SPY ETF, right? Look at the expense ratio. 0.09%. That means for every $1,000 you put in there, you're being charged 90 cents per year. While your average mutual fund is going to charge you between $10 and $15 a year. You might sit there and say, oh, it's not a big deal. It's a big deal. And here's how much of a big deal it is. Let's go to our trusty Everything Money software to see an example of this. In our Everything Money software, we have the retirement calculator. You can get this entire software for only 80 cents a day. But let's say you're sitting here, you're 40 years old, you have $50,000 in savings, you're saving $5,000 a year, you're gonna increase your savings by 5% per year, you're gonna retire at 70, your annual returns are, let's say the market of 9.8%, during retirement 6%, you're gonna live to 100, and inflation's 3.5%. Your current income is, let's call it 100,000 a year, and you wanna live on the same income in the future. I'm just fast forwarding here. Here, in retirement at the age of 70, you're gonna have $2.3 million, okay? Now, let's decrease that by 1.5% per year. It's changing it to 8.3% per year instead of 9.8. Okay? Generate, age 70, $1.7 million from 2.35. That's the difference, saving $5,000 a year and starting $50,000. It costs you $650,000. Okay? So that's only over 30 years. That's a huge difference. If you don't see that, I don't know what. Now, if you need support, things like that, join our Patreon, 80 cents a day. You'll have a lot of support from people in the community say, don't worry, when prices, that's the reason why people need financial planners, is more for the emotional support. If you're going to them because you think they're going to beat the market, you're crazy. But if you go to them because they want to be your solace and all that stuff, go find other groups that are a lot cheaper. For $23 a month, 80 cents a day, you can have that.
Change this to something like 30, Paul, on the age. It's starting at 30 with...
oh, you're right. Start at 30, guys.
This will be astronomical here, the difference.
Age 70, you would have 4.2 million, and at 9.8%, 4.2 million versus 6.35 million. So if you're 30 years old with those same attributes, It's over a $2 million difference.
I have this conversation with normal people and say, listen, if you're going to hire a financial planner and be in those safer mutual funds, just you have to know it's costing you millions.
And your financial planner is charging you a fee on top of the mutual fund fee.
Mm-hmm.
Guys, it's insane. I remember a friend of mine once told me, he's like, I think my financial planner with the mutual fund fees and them takes about 2% a year. And I was just like, oh my lordy. It was insane. But anyhow.
So what is in SPY?
So here's the great thing about S&P 500 SPY. It matches the S&P 500 index to the T. It does it. It's a weighted portfolio. The bigger the company, the more money is in it. So look at this example. Apple makes up 5.6% of the portfolio, and it's the 5.6% of the entire S&P 500. And as you go down the list, these are all the companies by market cap. And they're adjusting it as time goes on. When companies get added, they automatically add them. When they go off, they automatically get rid of them. You don't have to do a single thing. All you have to do is know where the market is, and it's about where you're going.
So this ETF is a basket of all these stocks.
You're already diversifying into 500 companies by doing this.
Mm-hmm.
That's what you're doing, okay? Your job is to save for retirement, put the money away, and never look at it again, okay? Now, there have been concerns about ETFs, things like that, in terms of liquidity if there's a market crash. But remember, if you're in a long-term position, I don't know if there's going to be an issue, and I don't think there will be, but a company like Vanguard and the Spider, things like that, they're going to have a lot of ability to go do things. And I just look at this saying, this is exactly what you should be looking at. Why go try to beat the market and pay somebody to do it when you know that it's already stacked against them? Because remember, they have career risk. Their job is to just be close enough where it's respectable. Because over long periods of time, you're not going to realize if 6.4 million versus 4.3. You're still going to look at it and go, man, I gave this person 50 grand and 5 grand a year, and they made me 4.3, not knowing it cost you $2.1 million of that 4.3.
So my friend last night asked, why doesn't my financial advisor just put my money in this for me?
They can, but why pay your financial advisor then?
I guess so.
Why even do that? Save your money. Save your money. You worked too hard to go give somebody $2 million that didn't do it for you.
Yikes.
Right?
Yeah, I've heard
Now,
this
if
too.
you can find somebody, here's the key. If you can find the next Warren Buffett, here's the funny part about Warren Buffett. Everybody jokes about how great Warren Buffett is. In the 1950s and 60s, you would have never invested in Warren Buffett. Why? Because he was too different. Now we know Warren Buffett as Warren Buffett. So you don't sit there and say, of course I'd invest in Warren Buffett. No, you wouldn't. I invest in a guy that I think is brilliant. His name is Gary Mashuris. He beats the market over long periods of time, crushes the market. But guess what? You listen to him, boring. He doesn't like Tesla. He doesn't like Amazon. He doesn't like this, doesn't like that. This guy sucks. Mm-hmm. And when someday he ends up beating the market by 6 or 7% a year, people will be like, oh, I would have invested with Gary. No, you wouldn't have.
I think our viewers need to know that beating the market by 6% is
an insane task, guys.
Yeah.
It is phenomenal. Phenomenal.
Gary likes stuff that we've never even heard of.
Yeah.
I mean, he'll show us companies and we're just like, never heard of this ever.
Mo,
Yes,
is that SPY on your
This is
trade?
SPY.
What are people doing in the bid and ask trading platform?
Should you even trade ETFs, Mo?
You know what? For that employed trader, I've been toying with the idea of making this one of the 5.
Really?
Yeah, I have been. The reason is, let me show you. So we've had this is since March of 2020. Look at that incredible climb. Now, the thing that gets me about this is this thing does move pretty well for being an ETF. And if we could just zoom out, give me 1 second here. I want to zoom into this area right here.
What Mo's talking about is we created a series called The Employed Trader. If you're at home, you may have kids and a job. You don't have time to look at these charts all day like Mo does, but you may have an hour a week to look at these charts. And so if you're thinking about you want to get into trading, watch our Employed Trader series as I start getting into trading, and you can follow along. And of course, join the Bid and Ask Nation, our middle Patreon tier, where you can follow Mo's trades on a daily basis. Go ahead, Mo.
So the thing that gets me about SPY is that you do have this is that fall that we had back in March of last year. I look at this saying, okay, we're probably going to get something again. I don't know when, but it'll likely happen. And hopefully it doesn't happen this fast where you get, 38% in a couple of weeks? Yeah, a month. So I'm hoping that this happens over a longer period of time. But what you notice about SPY and that you don't see on a lot of ETFs, you have a lot of good engulfing candlesticks all over the place. So there is a lot of volume that's driven us because it's a great ETF that a lot of people flock to. So the good thing is that it gives you good engulfing candlesticks. It gives you good buying patterns. The trend is always pretty defined. It's not usually doing sweet spot reversals, this and that. So I've been toying with the idea. I don't know if I'm going to get an answer, if I'm going to give an answer yet. You'll find out on Monday, but
And by the way, the other great thing about ETFs, guys, you can make bets on sectors that have been beaten up pretty badly without trying to guess which company it is.
Like Jets.
Like Jets. So last year, airlines got smashed. So instead of sitting there going like, listen, I don't want to go read all these financial statements, buy Jets.
Yeah.
Anything like gold. I like gold. I just don't know which gold company to buy. So I buy GDX and GDXJ. It's gold miners, big and small. Okay, I'm making a bet on the industry. I have less upside, but if you see a beaten up industry that you don't think is going to be beaten up for very long, that's how you can make a low cost bet on an entire sector and go, okay, you know what? This has been beaten up. I don't think it's likely to continue forever. Let me go start buying into that. It's a very cost-effective way to go do that.
Another great example is the semiconductors. When we talk about Intel, AMD, everybody goes crazy.
Yes.
Just go buy the semiconductor ETF. You got them all. It's
If
a
you
great
think-
way.
if you
you believe in semiconductors, going up or down, whatever you want to do with it.
Final take on SPY and why people should get into it.
Listen, I've had
Or
SPY.
general ETFs.
Yeah,
So,
I've had SPY, I've had VU, I've had mid-cap, I've had small-cap ETFs. The great thing about ETFs is you can find anyone to fit your criteria. SPY is just the S&P 500. It is the market. Why fight it? It's the market. Just go buy into it. And if you want, as time goes on, you learn more from our channel. You join the software, learn more about financial statements, take a little bit more of your money, 5, 10, 15% as it grows, and use that to pick individual stocks where you probably be able to beat the market if you are a disciplined investor.
That's a great take, Paul. Thank you for joining us. As always, our patrons all over the world, you know I love you. I'll see you in the Discord, and we'll see you on those beautiful Patreon-only live streams. If you're interested, you can join Mo in the morning every weekday morning at 9 a.m. with news and notes and stock analysis. And our big show, the 1 p.m. Eastern, Tuesday afternoons, we do our live streams. We're getting like 700 people in there. It's getting out of hand, but we would love you. What is that, Paul? What do you got there?
43,000. We just hit 43,000 subscribers.
Thank you.
This is a channel that had less than 1,000 subscribers last September, and we've been losing our minds ever since. And it's because of you and the viewers. We appreciate your support.
When the market crashed last year, we had 380, 400 subscribers.
It's incredible.
We're up 100 times.
See you on Discord for the patrons.
moon.
We're
Love you
growers,
guys.
not showers.
To the
the
moon.
moon.
You are a grower, Paul. That's true. See you guys. Love you.